Okay, welcome to another episode of the Startup Sac podcast, where we do interviews with Sacramento startup founders and innovators. Today, I'm at the offices of Moneta Ventures in Folsom with associate partner Sabya Das. Welcome, Sabya.
Thanks for having me, Jeff.
All right, let's start off with you introducing yourself and tell us a little bit about your background first, and then we'll kind of launch into background about Moneta.
Sure. So I have been a Folsom resident since I was pretty much 5 years old. Lived here, went to school, pre-K all the way through 12. And went to college at UC Berkeley, dabbled around in different things, went in pre-med, but then I've lived in technology my whole life. My parents were both technologists. My dad was at Intel for 21 years, so I've been surrounded by it, and decided that's where I wanted to end up again. So finished with a major in cognitive science and computational modeling, and decided that I wanted to get back into tech. And this is right around the time that Moneta was just starting to form. So I had the chance to work with all the founders of Moneta at the previous venture before I went off to college as an intern. So it was a cool opportunity to get back involved. And so I applied, and they said, come on board, and took me on as an analyst for the summer. Joined on then, and I've been here since pretty much day one of the fund, and did not want to go back to the Bay.
So when did Moneta launch?
Launched 2014.
2014, that's what I thought.
That was the first fund.
Okay, so for those who aren't familiar with Moneta, Moneta Ventures, it's pretty much the main venture VC fund here in the Sacramento area. Can you tell us a little bit about the origins of Moneta, who started it, and why, and what you guys do?
Sure. So like Jeff said, we're an early stage venture capital firm founded by Lokesh Sikaria with other two partners, Denise and Vaibhav. And the four of us make up the investment team here. We invest primarily in technology and healthcare companies, the majority of which are in the Sacramento area. So we aim for about 70% of capital to be deployed here. And so VCs invest in companies ranging from very small to people, startups, all the way up to the Ubers of the world. And so we kind of focus somewhere in between that. We're on the Series A seed stage companies. And the origin of Moneta pretty much was to fill a void in the Sacramento landscape where there was no access to early stage capital for startups. So Lokesh, Vaibhav and Denise have all worked together for about 20 years, and they've grown two companies locally from very little to over 300 million and 125 million dollars in revenue respectively, and had pretty great acquisitions out of that. But in both those cases, the companies were not venture backed. They were they're bootstrapped or organically grew. And the second company, Sparta Consulting, where I got to intern at, was pretty much backed purely by employees and bootstrapped by the founders. So in both those cases, they realized there's no money to be handed out here for high growth companies, and because of that, they started Moneta Ventures.
So did they kind of reach where they wanted to go with their prior companies, or just wanted to do something to give back, or what was kind of the motivation for starting Moneta?
Yes, I mean, it was a bit of both. So like any other VC, the primary goal is to provide a return to your investors and to make money. So it wasn't purely altruistic, but at the same time, they've been in Sacramento their whole lives, and they realized that this is a really great way to help entrepreneurs here and grow the ecosystem. And that was the main idea.
Okay. So that was back in 2014. Can you talk a little bit about what verticals, you mentioned technology and healthcare. Are there any particular aspects of technology or healthcare that you focus on, and talk a little bit about what stage, as far as you mentioned seed and Series A, kind of what are you looking for as far as the stage and the vertical of startups that look to you for funding? Sure.
So since we are one of the few players here in the VC space, we like to stay purposefully broad in our investment thesis. Helps us find the best deals. And so if we need to stray from our sweet spot a little bit to find the best entrepreneurs, best deals, we're open to doing that. But we pretty much just look for great founders and great teams that have some traction. So by seed and Series A, what I mean is that everyone changes their definition of that depending on where they are. And Sacramento being a smaller economy than San Francisco, a seed round there could be equivalent to a Series B round here, because they hand out $5 million seed rounds, and that's a pretty large round for a Sacramento startup. So for us, what we think of as seed and Series A are for companies that are raising the first institutional round. and have generated some revenue. So what we say is typically $500,000 to about $10 million in annualized revenue. So we come in when the company's making about $45,000 a month. Typically recurring revenue is the stage that we start to look at them at.
45,000 a month, MRR.
MRR. That's pretty much where we come in. And we're writing checks between $500,000 to $2 million as an initial investment. And we've been averaging about $1 million historically as our first check in, and we reserve $1 for every $2 we put in as follow-on capital.
Okay. Interesting. So you've got a portfolio. Maybe talk a little bit about your portfolio, some examples of some of the companies you've invested in.
Sure.
So people can equate Moneta with I know like SupportPay I think is one.
Yeah, we've invested in a lot of local companies. So we have 2 funds now. The first fund that we started in 2014 has 15 portfolio companies, and we've had 2 exits out of that fund. And with that, the idea was to kind of mimic Sacramento, so technology and healthcare. And with the second fund, we're trying to add in agricultural technology as well. So that's kind of the Sacramento DNA, retail, tech, healthcare, and ag is kind of what we see as the area's strengths outside of government and
retail. Huh? Okay.
I mean, a lot of the big successes here. You have Sleep Train.
Okay.
You have Rayleigh's, a lot of homegrown, almost brick and mortar retail successes, and Dale actually at Sleep Train's went on our investment board and given us a lot of advice on that front. But some local successes, we have the ones that have raised some funding recently as well. In our first fund, we had Engage 3, based out of Davis, and that's a great example of a company that's using local strengths to kind of boost it. So they're retail technology, and what they do is pretty much price optimization down to individual people. So they're able to find what people buy, how to give discounts to individuals based on competitive intelligence. And the founders of that actually had a company that was sold to SAP for $200 million a few years ago. And this is kind of their second act. And so incredible talent there. And they are one of our breakout companies from Fund 1. We also have Telemed2U, which is based in Rockland. And we invested in them about a year and a half ago, 2 years ago, and they've grown in revenue. They've doubled in revenue since then. And what they do is pretty much provide specialty medicine care over telemedicine. Access to dermatologists, psychiatrists, etc., to hospitals and patients over telemedicine. And it's something unique that there's a lot of players that are trying to build the next telemedicine platform, but these guys have actually managed to connect specialty care doctors to people directly when they wouldn't be able to do that otherwise. And you probably heard of FanTag as well. So one of our more recent investments out of Fund 2, and a lot of people have heard of them, but pretty much providing ways for fans of any live event to instantly experience what happened without having to record the entire event. You can just tag the moment and they can get looped into all the high quality streams at a sporting event or a music concert or something.
Yeah, very cool guy. I chatted with Brian with an interview back in April, I believe.
Okay, yeah. Brian's absolutely awesome, and they were probably one of our favorite pitches because they came in and they did a live demo for us, which is risky for any company pitching at least for the first time, and
something's going to go wrong
seamlessly, and so it's been great since then.
Awesome. Any that you see as being really potentially disruptive and innovative to society or to tech in the future? I mean, I think FanTag's got the potential to really disrupt how people share video.
Yeah.
Any others come to mind as far as absolute disruptors?
Yeah, so we have a list of companies actually right there on the wall for you to see. And so 22 so far. And each of them that we see that we've invested in have some kind of niche that they're going in. So when we think of disruption, it's less about just having an IP that can immediately disrupt the industry, but it's pretty much finding a niche in something with that technology. Like FanTag, for example, talked about sharing videos, but in reality, it can be used for so much more. A good example that we always talk about is education or education conferences. You think about students that currently the way they experience college education is they sit in lectures, take notes, maybe have a webcast to watch later. But if you're sitting in that lecture and you have some notes and you tag a moment that's important to you, you suddenly have 30-second clips of information that you can then go back on instead of trying to watch a 2-hour-long lecture. And so I think it's a really cool application of some technology. And same with Engage 3. In terms of retail optimization, you think of it as advertising or making money, which is why they want to work with retail stores. But as an individual, if I can have a tailored way to go shopping and tell me that I can save 30% of my monthly bill on groceries by shopping for X at this store and Y at that store. It increases discretionary spending for Americans, and it's a really, really useful technology in civic technology as well.
Cool.
So I think with all of these startups, they start at a place where they can generate revenue, prove out their model and market, and then actually disrupt that industry.
Okay. So we talked a little bit about your portfolio there, and I'm sure a lot of founders in the area are going to want to come knocking at your door. And I see a lot of founders every week, and a lot of founders have a notion that once they have an idea, they just need to find an investor to give them some money so they can build out the idea. But from a VC perspective, what kinds of things do you want to see? We talked a little bit about you want to see a certain amount of MRR. But what else are you looking for from a startup founder besides a certain amount of revenue per month? Like, for example, the team, composition. What other things are you looking for?
Sure. So to your first point, that a lot of people go in with the idea, with the thought that they can pitch an idea and get funding to build it out. Most VCs and investors won't fund an idea, and that's true pretty much everywhere now. Yeah. And the reason is there's just too many good opportunities to fund that are already gaining traction, and also the risk profile of funding an idea is disproportionate to the value. What I always say is you take the idea as far as you can on your own. Everyone has different means of how to get their idea or business off the ground, and some people don't have the financial means to get it to a product. But however far you can take it by bootstrapping, whether it's developing a fully fleshed out business plan or putting together a minimum viable product, you should try for that first on your own. And then after that, tap into resources around you to get to the next step, whether that's some angels you might know or friends and family to help get there, and try to get some demonstrable traction before going to institutional investors. So you mentioned it's not just revenue, but other metrics that would be really useful. Before I get to the team, is actual users on the platform, active user count, user retention, or just customer retention in general. Loyalty and retention numbers a lot of times mean more than absolute numbers. People can be making $500,000 a year or a month, but it's like 30% retention, and so they have to keep putting money in to get new customers, whereas someone could be making half that and retaining 95% of their customers. So different metrics for different different businesses and verticals. Sure. Those are things that we like to look at. So getting into what we like to see other than just revenue. You mentioned team. That is probably one of the most important things. So there's a lot of other stuff, but the team is kind of a make or break to whether we want to continue with them. Founder obviously has to be capable and have some subject matter expertise and be a good business person in knowing things, but also has to have surrounded himself with people that can fill that skills gap. So we always like to say not everyone has to be an all-star, but you have to have complementary skill sets that make the management team an all-star. But then the other big thing we see in founders is transparency, honesty. That helps from day one, as well as a willingness to work together. I think if you butt heads in a pitch meeting, it leads to a very bad, it bodes ill for the future. Yeah,
and if they say something and you go do your due diligence and you find something different or something they've hidden, they're not going to make it, right?
Completely, yeah.
Okay. So what are some of the shortcomings or gaps you typically see in startups that want to pitch a VC? Besides the revenue, their team's not ready. Are there any other, things that founders out there that could work on before they come and pitch to you?
Sure. So shortcomings, gaps in general. One big one that we've seen is a lack of focus in the business, which pretty much means people have grand visions, and that's great, and that's hopefully what they hope to achieve. But a lot of the companies that we get pitched by will be operating in a $1 billion market or $10 billion market, and they pitch to us with the thought process that their product or service can conquer that market. And our thought is we're investing in the Series A stage. There's no way that a Series A company will compete with the IBM, Googles, and Intels of the world. And so lack of focus. By that I mean having a niche focus.
They're trying to be too broad.
Way too broad, and just overly lofty goals. And that comes across in the pitch, and it's not concise. That's one of the very important things, is that demonstrate traction in one part of your business, and then using funds that you raise, you can then grow that. It's probably one of the biggest things. The other shortcoming that we see a lot is, and it's a lot of local shortcoming as well as also in the Bay, but embellishment is one word I'd use, because everyone likes to copy the metrics of the Snapchats or Facebooks, and very few companies actually make it there. The quality of your metrics might not be that high. So that goes back to the point about transparency, is understanding your business, your data, your metrics, and presenting that correctly. We've had companies that will come and pitch to us that have $20 million sales pipeline, and maybe $100,000 in sales, right? And when we dig into it, you're either not capable of closing deals, or you're just making up your sales pipeline. And so that level of understanding of what business looks like, how to talk to investors about financials and metrics is something that we definitely think could be worked on.
Okay. Yeah. So wrapping up the advice for founders, for the founders, entrepreneurs out there who are listening, what other pieces of advice would you give them before coming to pitch you or anybody else?
Sure. So there's a lot of top 5 things to do before pitching to a VC, Business Insider kind of articles, and I hope people read those because they're really useful. But the one thing that I think is incredibly useful is seeking mentorship and advice. I don't like the word mentor that much because it gets overused, but just advisors and people that can help you through the early process. I always say, it's like you don't need to reinvent the wheel of starting a business. You might have a very unique idea, but the processes that are in place to get it off the ground are tried and true. And so find people that have done it before or have done it and failed, and have them advise you through that process. So seeking that network, and find the right people to help you with your business is probably the one thing that many people don't do until it's too late. So I would really recommend doing that.
Okay, and that's often something we hear from the founders themselves too, or that's saying mentorship is key. So I think that's something we maybe need to work on here in Sacramento is building our mentorship network. So moving back to kind of the Sacramento region as a whole, you guys launched in 2014.
Yeah.
What kinds of changes have you guys seen in the local startup community since then? How has the ecosystem evolved and grown or not grown for that matter? What's your opinion on that?
We have a group like Startup Sac now, which we didn't before. So I think there's been a large flurry of economic activity at all levels, from the grassroots level all the way up to larger organizations. You have Barry Broom and Greater Sacramento, who are doing a great job of giving Sacramento a voice to companies big and small. They've relocated many companies here. They're working on a lot of big deals to bring jobs locally, and so it's putting Sacramento on the map. We've seen a lot of, I don't know if they were around before necessarily, but a lot more co-working and accelerator spaces crop up recently, which I think is awesome. I think it gets founders that have an idea or something and don't know how to put it on paper or build a business model and all that stuff. It provides some kind of curriculum and framework.
And it gives them access to that mentorship network.
Completely. Yeah, I think that's huge, and it's filling in the gaps between ideation to funding. There's a lot of things, and I think we've seen people try to fill in those spaces, and it's been going pretty great so far.
Okay. So there's been some big announcements in the last few months about new funds here in the region, including Kevin Nagel's fund, Sierra Energy has one, you're raising a new fund. What do you think Sacramento's funding landscape will be like, say, a year from now or 5 years from now? We're obviously not going to be Silicon Valley and Sand Hill Road, but how do you see us evolving as far as just the funding in the VC realm?
Yeah, sure. So for us, we are hoping to wrap up our fundraise over the next 3 to 6 months. And my goal for Moneta, at least over the next year, is to have deployed significant more capital locally and get back into fully funding. I hope the other funds that you mentioned, everyone else has a solid plan and has started raising. So we've always said that we're really excited about all that. Sacramento could use a lot more capital. 5 years from now, what I hope is that we become kind of a microcosm of Silicon Valley. So they have a 45-year head start on everyone else. So you can't be Silicon Valley overnight. But the microcosm of that, I mean, is people that are focused on different stages and different verticals. So we're almost a generalist fund regionally where we focus on different verticals and almost different stages. But when you have enough players in the region, you can have people that we're very good at technology, so we can be in that, and you can have people that are, IoT, AR, VR players, and it's slowly cropping up. John Gregory and the Green Screen Institute at a city, it's AR focused, AR VR focused accelerator. So more things like that where they can be, having fund managers that know exactly what it is that they're investing in and accelerate those companies much quicker. That's what I really hope for. And we could use, seed stage angel funds, all the way up to much later stage funds like Central Valley and DCA. So that's what I hope, that more capital flows in for that.
Okay. So beyond funding, what do you see the strengths of the Sacramento startup ecosystem, and what do we need to do to improve besides get more funding in here to make us a stronger, more competitive community for startups?
Sure. We have a lot of strengths, a lot of assets. Biggest one is talent. People always say that talent is lacking, and yet everyone that I talk to looking for a job says that there's no companies looking to hire. And so I think that that's a discrepancy, and there actually is a lot of talent. So across the different verticals, you have the Intel, HP of the world that have a lot of great engineers, managers, that amazing talent that are looking to go into the entrepreneurship world. So we have a lot of talent. Connecting them to the new startups coming in, helping them start their own businesses, I think is something that we should capitalize on now. But that's one great asset. We have amazing universities here. I know a couple of our startups almost hire exclusively out of UC Davis, Sac State, and Chico State, and they have some of the greatest hustlers and talent in technology and HR marketing, and so we have that going for us. We now have government that's really on our side and actually investing, right? A lot of times people think it's an impediment to economic growth, but lately it seems like it's been more of a we'll help you or we'll stay out of your way as you progress with the Rails grant and things like that coming out of the mayor's office. So I think that those are some definite assets for us going forward. And then just capital coming in now. We have a pretty broad angel network going from Davis and Sacramento all around the region, which has been great. So all the we have a little bit of everything. I think we need to grow that more.
Okay. So here's a shot, maybe when we're wrapping things up, a kind of a shot out of left field here. A few months ago, Comstock Magazine ran this column, their buzzwords column, and they were asking people about the word, I'm forgetting what it is, a unicorn. So they were asking, will Sacramento ever see a unicorn? And so why don't you get your thoughts on that? What's it going to take for Sacramento to get our first unicorn? A
lot of it is luck. Not luck in the sense that it could just happen, but in the sense that many startups fail, and it's a volume game. So we hope that if we invest in 50 companies by the end of Fund 2, one of them will have reached that status, and we're going to do everything we can to make it happen. I think it's important that Sacramento has a unicorn or like a decacorn or whatever you want to call it going forward. And the reason I say that is because like I said earlier, the greatest thing you can do is to bootstrap your company as far as you can get it. And if you have a company that grows to that level, it will have hundreds, if not thousands of employees. And the first 100 employees at a company usually come out great financially.
And they're going to go off and invest and start their own.
Exactly. And so they'll become angel investors, they'll become entrepreneurs in themselves, right? And so I think that we should do everything we can to have that happen. And so building a base of strong startups here with great business fundamentals that can grow and make more millionaires is the key to having more startups come back and start here, homegrown. So I hope it happens in the next 5 years.
Oh, cool. Well, that's good to hear. I'm glad you're optimistic, it sounds like. So we want to thank you again for your time to wrap up. And first of all, ask, is there anything else you'd like to share with Sacramento, the entrepreneurs out there? Any shout-outs?
Yeah, I mean, all our portfolio companies love you guys. But for entrepreneurs that are aspiring to grow, there's a lot of resources around here. I would loop into all the events. I know you guys post pretty much everything that happens on your website as well as Startup Digest. So come out to as many of those as possible because there's a lot of cool learning happening, but also just networking. And people think networking is not necessarily always useful, but in a small, tight-knit community like Sacramento, it's great to be connected.
I'm an introvert, and networking is critical here. And
Yeah.
even though it's hard for me to do, it's critical.
Yeah, and for us at Moneta, at least for me personally, people reach out to me all the time, and most of the time companies are either too early or outside of our investment thesis. But I love getting coffee with local entrepreneurs here, meeting with them just if not to learn what they're doing, but also how we can help them out outside of funding them. So my contact info is on our website, so shoot me an email, and I'd love to meet up with local entrepreneurs.
Okay, that's monetaventures.com, is that right?
Correct.
Awesome.
Yeah.
Well, thanks again for your time, and wish you guys best of luck with all your portfolio companies with raising your round, and best of luck.
Thank you.